How are the SEC's actions contributing to crypto market chaos? Not just in terms of volatility, but in terms of regulatory uncertainty. If you're an investor in cryptocurrency or interested in markets or investing in general, you're gonna wanna watch this video. If you're new to this channel, my name's John. I'm a lawyer, a former compliance officer at a big bank on Wall Street. Today we're talking about Gary Gensler, the chairman of the SEC, and his regulation of the cryptocurrency markets. Gary Gensler is like the person that you know in your life who says a lot without really saying anything at all. He's proposed twice as many regulations as his predecessor in half the time. 53 in total so far. He's also launched about 50 enforcement actions against crypto firms. Yet amidst all of this regulatory action, there has been little to no guidance for the industry on what actually even qualifies as a security, which the SEC is in the business of regulating. Not to mention how firms are just generally supposed to and expected to operate within the United States. For all of the crypto market chaos caused by the likes of FTX, the SEC does not receive nearly its fair share of the blame. That's starting to change. This past week, Congressional Committee questioned Gary Gensler on his agency's approach to regulating cryptocurrency markets. Let's summarize what Gensler said in 3 points. First, he refused to answer directly when asked multiple times whether Ethereum was even a security or not. That's the world's second largest cryptocurrency, folks. Second, he reiterated his view that most crypto tokens are securities, but he offered no guidance to the crypto market on how they could actually register with the SEC. And third, he acted completely indifferent as to whether this aggressive enforcement action with little clear guidance would drive the industry out of the United States. He didn't seem to care. Gensler and the SEC's current approach has caused massive uncertainty in the cryptocurrency industry. It has unfairly applied traditional finance rules to a fundamentally different market structure that's more decentralized. And third, his overly aggressive tactics have added more instability and regulatory risk to crypto markets. Let's talk about each of these three in tandem. First, starting with the massive uncertainty in the cryptocurrency markets. While Gensler has stated that most crypto tokens are securities, he continues to spar with his neighboring regulatory agency, the Commodity Futures Trading Commission. They're continuing to battle it out over which agency has authority to regulate which parts of the cryptocurrency markets. So I get it, Gary. If you come out and say that Ethereum actually is a security, you're going to have a sparring match with the CFTC. But by not saying it and by respecting your turf battle, you're causing rampant uncertainty in the crypto markets. It's no wonder then why so many firms from Binance to FTX choose to largely operate outside of the United States. But I have to ask too, where are the Democrats here? I know many of them took money from Sam Bankman-Fried, but Bankman-Fried also gave money to many Republicans as well. Yet it's only recently been Republicans in Congress who have been critical of Gary Gensler and the SEC's handling of the crypto regulations. It's only been Republicans recently who have been supportive of promoting an industry, getting the regulations right, and seeing the benefit and value of bringing to America blockchain technology, everything that tokens have to offer, and just everything in the crypto ecosystem. If we continue in the current environment of how the SEC has chosen to regulate the crypto market, it would be as if capital markets in the US today had no Securities Act of 1933 and 1934. It would be chaos. Next, let's discuss why it's unfair that the SEC is applying traditional finance rules to a decentralized market like crypto. Many of the risks are similar, so in some way it makes sense. Anti-fraud, anti-money laundering, etc., those types of risks are still prevalent in crypto, much as they are in traditional finance. But the markets operate in fundamentally different ways. A great example of this is the fragmentation of traditional finance markets. In those markets, the broker, the exchange, settlement agent, or clearinghouse, they tend to be different people. They're all different financial intermediaries. In crypto, by contrast, they're often the same entity. If you go to Coinbase, for example, they're not only a crypto exchange, they're also going to broker trades for you. They're going to custody your assets and settlements all done within that Coinbase ecosystem. But if you were an entity like Coinbase going to the SEC as an exchange, but then you tell the SEC you also have customers, the SEC would be like, whoa, 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 hold on. An exchange does not have customers. The SEC does not register exchanges with customers. They wouldn't even know what to do with your application. They don't even have a process for that. It's completely foreign to them. So even if crypto market participants wanted to be upstanding citizens of the crypto space, if they wanted to register their firms or tokens with the SEC wouldn't even know what to really do with them. It's unclear how they can register. Many of the firms that have tried to go this route, the route that Gary Gensler and many others have continued to say that they should continue going down, guess what they've been met with? Silence. The continued silence speaks volumes to the crypto industry. It translates to, we don't want the crypto industry in the United States, period. Finally, let's talk about the overly aggressive enforcement actions that the SEC is engaged in. Most notably, Binance, Bittrex, also Coinbase received a Wells notice. There are legitimate aspects to probably all of those enforcement actions. And there are also probably many legitimate aspects to the 50 plus others that Gary Gensler has issued in his short time as the SEC chairman. The problem, they're relying on old guidelines that apply to securities, not specifically to crypto, and they haven't updated guidance sufficiently for the industry. Congress hasn't passed any new laws. The SEC has remained silent on major issues like Ethereum or Bitcoin, whether those actually qualify as securities under the Howey test, which is the test for determining whether an asset is a security or not. When Gensler was asked in the recent congressional hearings whether he was concerned that his actions would drive the industry from the United States, do you know what he said? I'm trying to drive it into compliance. And if they're not complying with the laws, then they shouldn't be offering their products to US investors. Mr. Gensler, how can you expect market participants to comply with laws that they don't understand, that are not clear? Coinbase CEO Brian Armstrong, who has made waves recently by saying that he would consider leaving the United States, he summed it up probably the best. The US has potential to be an important market in crypto, but right now, we are not seeing the regulatory clarity we need. If the SEC continues along this path, the United States will find itself in the situation described by one of the SEC's own commissioners, Hester Pierce, one of the few conservatives on the SEC. Pierce said, rather than embracing the promise of new technology, as we've done in the past, here we propose to embrace stagnation or centralization, urge expatriation, and welcome extinction of new technology. So yes, while the crypto market has had its disasters and missteps over the past year, from Luna to FTX, Binance getting into the mischief they did, the SEC is certainly not without fault. Their actions have actively contributed to crypto market chaos. If the industry leaves the United States, Gensler and the SEC will only have themselves to blame, and Congress as well, for holding the bag and not issuing new legislation to help this market understand where the guardrails are. Thanks for watching. Make sure to hit those like and subscribe buttons. Check the links in the description if you want to read more, and we'll look forward to seeing you on the next one. Cheers.